Sometimes I get these emails from Quora. I guess I signed up for it. I don't know if I used it at one point. I have no idea. But for some reason I get every one of them now is trading related. And I'm sure it's just things I've Googled or something just out of curiosity and for fun. Sometimes I like to read these. I don't gain anything from it. I think it's just kind of humorous to my day, if you will. And as I was starting up this recording software, I was just reading this and kind of laughing. And I don't know this person one bit, so maybe he's successful, maybe he's not, maybe he's happy, maybe he's not. But his answer to this, has anyone been able to trade Forex successfully for a living? He says he has. He says it wasn't easy. Was it worth it? Maybe. He still does it, and he loves it. However, he recommends nobody else should do it. Some of these things kind of just blow my mind. And they talk about how they don't know a single trader, at least real profitable traders who trade their own accounts for a living. And my theory behind that is just the simple fact that the interesting thing about society as a whole is that most highly successful people, you'll never even know their name, much less what they do. We only hear about Mark Cuban and the CEO of Apple and Amazon, or, the CEO of large companies in your area. But we never hear about the person who created some app or some software, and traders. And I think the reason behind trading wise is, number one, successful traders find that it's obviously far more profitable to, think of Al. I guarantee you, Al could charge a lot more for his software or his material. I mean, he could probably charge 10 times more and people would pay it, no question. And he'd make 10 times more money. His webinar, he could charge probably $1,000 a month. Somebody would pay it. However, if you listen to him long enough, you start to realize everything he says, he's already anticipating it. He's warning you of something that's going to happen. And when you hear him enough times, you start to realize that. Let me just kind of give him a few examples from today. Here's the Emini. So over here, he said strong trend. He said we know one of two things. We know either a bull trend. Whoops. I don't know what I did there. He said we know we'll either get a bull trend or a trading range, and we make it a deep pullback. All the way through here, he said that. But my point is, the reason you don't hear about a lot of successful traders is, I think and even Al said it, and it just makes sense. Most of them stick to themselves because, number one, how do you explain trading to someone that's either not interested or has no idea what you're talking about? Think about it. For all you people that have been doing this for a while, you go find a buddy that doesn't have any interest in trading and talk to them about trading. They're not going to care what you have to say. So, I think most people, and for one, if you just think about it, who wouldn't want to make money, not have to talk about it, and kind of come and go as they please? So, anyways, these things I think are, for lack of better words, they're dumb, but I think they're kind of silly. They're fun. They're humorous. So anyways, back to today. So coming into the day, we had a few things. You knew we were in a broad channel. Bar one, big bull bar. Probably buyers above. However, the one thing you have to be thinking of is bar one, in general, 20% chance it's either the high or low of the day. So you have to be open to the fact that this could be a trap and not the low of the day. Tight channel, you can very easily get a double top and go down. So what we don't know is if this is a vacuum and bears waiting to sell, or if bulls are strong. So the question is, will bulls buy the close? So always in long above bar one. However, it's not clear yet. What's the follow through? The bulls failed to even get a bull bar. Typically only open. It's kind of dangerous because, again, you don't have a lot of information on the day. Therefore, there's a higher probability of an opening reversal, and there's a higher probability that traders will sell. And what happened right here? Well, think about it. Bulls buy the close, entries 8 even, price goes to 9.75. So they tried to get 2 points and they failed. Here, price went to 9.25. So if you think about it, a lot of bulls buy, try to go for 2 points, fail, and when they see this, they're disappointed. They try to scalp out for 1 point. The traders that were quick enough bought at 8 even, got out at 9.25, it turned down. Other traders, when that happened, just bailed. So here, probably buyers below. We had buyers below. I'm assuming maybe this bar went down, up, and down. Either way, bulls bought the close and were quickly disappointed. So now it's a bear bar closing on its low. Always in bulls that bought above get out below this bear bar. Huge bear bar. Probably a surprise, probably going lower for at least second leg. However, better to wait for follow through. We have follow through. Always in short, probably going at least a little bit lower. Maybe a measure move based on this body. We're probably close to a measure move based upon this bull breakout. I must have my snap mode on. Here's that. Reached it. So 4 consecutive bear bars, 5 consecutive bear bars. Sellers above, probably going a little bit lower. And when you get this, huge, big move down, big move up, probably a trading range. I would get out just at the close. The odds are really high. We're going to go above this bar. And plus, realistic probability the first reversal down fails. Trading range price action over here. We have a double top, measure move down. We're at that target, so probably buyers in this area forming a trading range and probably will close this gap. So quick, I would just get out at the close. Aggressive bulls will buy the close. Other traders wait and they exit above this bar. Reasonable to buy above, stop probably down here. May get a deep pullback, maybe 50% of this. So follow through bar, probably going a little bit higher. Low one short, probably set buyers below. Surprise bar, big, outside up, probably testing the high of this bar in here. Exhaustion bar, this breakout was exhaustion, probably will go up to here and likely up to here. Probably buyers below. Good follow through bar, so increase the chances we'll get up to here. Probably the low of the day, and right now the bulls are hoping for a spike. So spike, pullback, channel, and a rally up, maybe a measure move of this range. Another big bull bar. So probably the low of the day, probably a stop down here. Bulls want some sort of measured move up to here, and they they want to go outside up. Here's the low of yesterday, somewhere over here. This may be the low of yesterday. They want to go to the high, which is at the measured move target. So consecutive bull bars, buy the close, but probably getting kind of late. Once you get 5, 6 buy the close bars, probably going to go sideways. So no real rush to buy up here. The stop's far away, so bulls are probably taking profits, and they want to look for 10 bars, 2 legs. Think about it. If you bought down here, you made a lot of money really quick. You're going to be more interested in getting out and waiting 10 bars and 2 legs and see what the bears can do. If the bears get this, you're going to be disappointed, and you're going to buy and look to get out, at the midpoint. If the bears can, only go sideways, if they get this just sideways and they don't get this, so in other words, if price was just to go sideways right here for, 2 or 3 legs, bulls would buy again. Whoops. So again, at some point, probably this might be disappointment, and bulls will try to get out at their original entry at this close. which is what they did. So disappointment bar, bulls buy the close, disappointed, quickly set a limit order to get out break even. We sell off. This could be a surprise, and we may get a small second leg to the moving average. We didn't go far above this high, so we may be forming a trading range with this initial range. High one buy, but weak signal bar. The body's very small compared to this bear bar. We may get a deep pullback. Probably will close this gap. Probably buyers below. However, even if we go up to this high, I think we'll still get a second leg down from here. So it's really a difficult buy. It's better if you can buy above and put a stop somewhere down here and buy more on a second entry. But I wouldn't buy. So big entry bar. However, it's again, what we don't know is if this was a buy vacuum test of this low and a buy vacuum test of the high close, which, again, bulls tried to get out the high close. They failed. We have our second leg. This might be strong enough for at least another second leg. If the bulls can get a big bull bar, maybe something like, this, closing on its high right here, might be a reasonable buy. We kind of had that over here, but it never triggered. So bear bar, probably going at least a little bit lower, probably sellers above. So might be strong enough for a second leg down. Another bear bar, body's getting smaller. I don't think we're always in short. However, we may have, again, a small second leg down, probably sellers above. However, bulls bought here, they'll probably buy more lower. So really, I'm expecting a trading range. I'm looking to buy. Outside up, some bulls will buy above. But the risk is big. 3 consecutive bull bars, so it's not all that great of a buy. If bulls do buy, they're buying with bigger risk, which lowers the probability, therefore increase the chance of sellers above. Some traders will buy and hope we get a quick bar, and if we don't get a quick bar, they'll be quick to get out. It's kind of like this. They're buying here, quick bar, but as soon as they get a disappointing bar, they get out. Whoops. Keep hitting the wrong keys. Disappointment bar. Some bulls will just get out at break even. Other bulls may just scalp. So if you think about the logic, if you're buying above this bar at, let's say you buy it above, so 750, a 1 point scalp is 875. Therefore, you may buy, and when you see this, you place a limit order to scalp out at 1 point, 875, and it went to 850. So what happened there? Bulls that bought above failed to get a 1 point scalp. Other traders, some traders bought the close, 56.75, and let me see this real quick. So yeah, bulls that bought the close of the bar were able to scalp out, but bulls that bought above were not. And bad stop. So bad second entry. Doji, big risk, probably sellers above. I wouldn't sell above it, but I certainly wouldn't buy above it. And we're just kind of melting away. This is one of the problems with, we're at a 50% pullback. Everybody knows that. Everybody wants to buy. But what would be what would be disappointing? Well, it'd be disappointing if we just never got a decent buy signal bar at the moving average, or, at the 50% pullback. So if we just vacuum down, it's going to be difficult for the bulls to buy, which is what we're doing. So now, bear bar closing on its low. Maybe a bear breakout of a bull flag. Maybe we'll get a measure move down, takes us to the low close, no surprise. First target for the bears is the hive here. Some bears sell here, sell more below. We're already at the average entry, which is probably this low. Let me see. And maybe here. So you can see right there. So anyways, probably always in short. Some bears will buy, other bears will wait for a little more down, And then here, always in short, probably second leg, so traders are selling. It's not clearly sell to close though. We could easily bottom and turn up, and we're just melting away. So, no reason to buy, Big bear bar, best looking bear bar of the rally. It's kind of dangerous. You can buy the close, and the reality is you'll probably make money if you buy the close. but it's kind of dangerous. There's always that small risk that you get some sort of crash, and you could just fall, 20 or 30 or 40 points just in a matter of minutes. It's low probability, maybe 5% chance or less. However, it's just the risk you take. So if you think about it, the more you wait for stop entries and breakouts, the less risk you run of getting trapped and losing a lot. So not all that great area to buy, probably minor reversal. So big bull bar, it's okay to buy above, but again, the risk is big. The reason this bar is so big is it increases the risk. So it's kind of like this. It's increasing the risk, so it's increasing the odds of sellers above. So it's not a great buy, but it's an okay buy. Next thing to point out, it never triggered. So it makes it a little more difficult. And outside up, so we got a little bit of follow through, but again, bad follow through here. Bull breakout, another bad follow through. So some bulls expect a trading range for at least a little bit. And, bulls will buy here, they'll buy the close, they'll buy this close. They'll expect a little more up. However, when we go outside up and then we close this bar, a lot of bulls will just exit, get out of break even, get out below, get out if the bar closes on its low, like this. Some bears sell the close, stop up here. However, forcing you to sell at the middle and the low of the range, so this could very easily sell, go to a new low and turn up. Might be the final flag. So now we have a second entry, reasonable to buy above, stop below. Decent follow through, always in long. Trying to be always in long, probably are always in long, but again, we could easily become always in short with another bear bar closing on its low. Bear bar closing on its low. Do you have to get out? I would not. It didn't close on its low. 3 consecutive bull bars, so probably at least a small second leg up. Doji bar, and then we just had a huge, very quick bar. And this is, by the way, is the low of last month. Even not that it really matters, but kind of more you know, the better. And is what I'll just put the low. I'll put the monthly chart up real quick. So as you can see, big bear bar probably will get to the moving average. So probably going to be an important price for most of the month. By the way, this bar, I was long right here, and I decided I debated getting out. I bought above this bar, decided to hold for the simple fact we had 3 bull bars, and I figured we were bottoming, and if I got stopped out, I just looked to buy again. Then we got that, and then when this, I usually have a matrix right here. When this bar rallied, this price actually froze. So I think price was like right here, and my chart wasn't moving. However, my price ladder, if the current price was here, it was all of a sudden just up here. Whenever that happens, especially if I'm long and I get something, my expectation, I thought we were going to test the prior month's low back into this range. It's also close to the open of the day. I thought we would test into it. However, when we did it in just a matter of seconds, I just quickly sold and got out of my trade at the market. What the problem with these bars is, it's very dangerous to buy. It's extremely climactic and it's extremely unsustainable. And when you have something that's extremely unsustainable, it's the same concept as these bars or these bars. When you have a bar that is as big as the entire range almost, it's not practical or sustainable. Here's this, it's just, it increases the chances that traders are going to take profits. It's a gift. So it increases the chances of a failure. So whenever that happens, I just exit, even if price is here, I'd rather get out. I don't care if price goes up to here. If it goes all the way up to here, I'll just buy again. But there's just too much risk this happens, and when this happens, you have a lot of trapped bulls, and we could quickly sell off. So hypothetically, you could sell this close, stop up here. Kind of a difficult trade though. And look what happened. Everybody sold the bar. Would I sell down here? No. If anything, if I was short from this close, I'd take profits. We're forming a lot of lows. Failed to break out below this low for the something time. So it's not a great bar to sorry about that. So yeah, it's not a great bar to actually be short on. If anything, it's probably buy the close. So follow through, but again, big tail, another tail, maybe forming an expanding triangle, not a great place to sell. Big bull bar, you can buy, however, kind of tricky. The risk is big, so it's not a great buy. I think a lot of traders will buy and just scalp out, which is what they did on this bar. Low one short, it's a bad short, so probably buy bulls will buy. Just betting if it's a bad short, if you sell this close, sell below, stop up here, you're probably going to lose, which means if you buy here, buy below, put a target up here, stop down here, you're probably going to win. And that's what happened. So, however, bad follow through, breakout, bad follow through, getting another breakout, probably bad follow through. But this might be a big enough surprise. And often enough, when you have these bars, you try to test really close into the tail. Tail, another tail, back at the open, low of last month, I'll make it blue. So probably going higher. Best looking bull bar, possibly exhaustion, maybe a wedge, 1, 2, 3. Traders will just sell the close and they'll take profits. They'll sell to take profits. They'll sell the close, just betting it's a bad sell. And there you go. So whenever you get that in a trading range, a lot of bulls will get out below. If you don't get out below, you get out below. Just get out the close of this bar. This is strong enough for a surprise, probably at least second leg down. And another thing, normally when you see this, it's kind of like over here, you're thinking, we're going to go a lot higher. Well, if you think about it, this move up, down, this move up and down is virtually the same thing. Therefore, big rejection in price. Even if we get up here, we'll probably find sellers. So it's not that easy of a short. I'm sorry, it's not a great place to be long. So surprise, probably a little more down. Doji. Bulls probably bought here, bought more lower. Maybe at this low, getting out of break even. Tried to break above this low. Low last month, failing. So outside down, surprise, probably at least a small second leg. However, here, you could get out, but it's outside down, a little bit of follow through. Even if we go above, probably at least a little more down. Just bulls. And this, by the way, this is the problem with just buying at the market, saying, okay, we're trying to bottom. Well, if you think about it, the bulls are getting bad signal bars, therefore there's a lot of risk that this could happen and would just melt away. Just like over here, bad signal bar, bear breakouts. What's happening? This is, when you get this very often, this is kind of a warning that we're not going to go too far. So you're getting bear bars, bad follow through, outside down, tails, bad follow through, outside down, small body, couldn't close below these lows. Another body, another bear bar, but bad follow through here, tail here. Best looking bear bar, but weak. It's a doji, small body, trading range behavior, and then we went outside up. So it's not this. It's not this. Now we have 3 pushes down. It's reasonable to buy above, but again, very tight channel. If bulls do buy, it's also a lot of risk. So it's not ideal. And you got to think, computers are always thinking of how to screw the other person on the trade, for lack of better words. Things are too big, the move goes too fast, and it quickly favors the opposite direction, or you get the strong rally and it quickly favors retracement and a pullback to close the gap. bears made money all the way up here, so they sell this high, made money, sell this high, made money. They sell this high and make money. So probably something wrong with it. Oops. Keep hitting the wrong button. Doji, some bulls buy 50%, but why couldn't it close on its high? And here, a lot of bulls scalped out. Typically, it's best you have two choices. You get out, 3, 4, 5 ticks below this bar, or you get out below here. At this point, would I just get out at the low of this bar? I would not. I'd just get out below here. The bar it's big, and you're kind of, it's just, I don't know, you could get out kind of 50-50. You're in the middle of this stop and getting out a few ticks over here. It's not great. And here, we made a new low. However, bad stop entry, so probably better to wait. And, sorry, excuse me. Voice getting a little tired. And then we just went sideways. So, that's the problem with trading range days. You have a big outside up bar. Price goes up here. Bulls scalp. You make a new low. Traders buy back their shorts. At the new low, bulls buy new lows. Okay, getting a little tired, so I need to, I'm gonna wrap this up. Get kind of tired of talking. So anyways, always in. Aggressive bulls, maybe they buy. Other bulls get out, maybe below this low or at the low of this bar. Probably more realistically, you get out below this bar. Aggressive bears sell, always in short at the close of this bar. You can sell, I'd rather wait for a little bit more down. Probably always in short on this close. Always in short, what would I do in here? Well, I'd probably get out on this close and wait for a few legs up. However, always in bears, get out above this bar. Aggressive bulls start to buy. Always in long. Either you get out a few ticks below this bar, maybe on this low. Maybe above this bar. If you don't, maybe you get out here or here. It's not all that clear. Worst case, you get out here or here, but I think it's pretty late. But it's definitely always in short in here. Always in short, traders go short. Get out above this bar. Maybe they sell below here, but if they do, they've got to get out above here. It's a possible major trend reversal. A couple pushes down. Second failed breakout of the low of the day. Reasonable to buy above if you do. I would not get out below here. I'd get out just during this bar, especially at the close of this bar. I wouldn't wait till down here. And I don't think it ever became always in short in here. So if I was flat, I'd get out maybe at the close of this. I'd buy above this bar, maybe, or preferably at the close of this bar, but really not ideal. Maybe buy the close of this bar, stop down here. But if you do, trading range, failed to break out up here. So if I would certainly get out below this bar, if not the close of this bar. Where do I go short? You can sell the close, but it's not great. Maybe you sell here or this follow through bar, but again, not ideal. And then, so always in short in here. If I do anything, I would sell. Then went outside up. If bulls buy above, maybe they get out a few ticks below, so 3, 4, 5 ticks below this bar, or they get stopped out here. And if they get stopped out, they have to re-enter above this bar, stop down here, and they hold till the close. Overall, most important thing about today. Strong breakouts can fail. Strong breakout, quickly failed. Strong breakout, sideways, quickly failed. And they can reverse and just evaporate. So never think, when you get a breakout, especially when you look to the left and you see this. So strong breakout, but trading range over here. There's a reasonable chance that it's either two things. It's either a bull breakout, so a spike, pullback channel somewhere up here, or it's a trading range where you get a spike, pullback, and a range. In this case, we got a spike, pullback, bear breakout below the range, and measure move down. However, whenever you get these strong rallies, and then we sell off to a new low, the odds are pretty high that you're going to form a trading range today. So a lot of bulls, knowing this rally was strong and knowing it's either a trading range or a bull trend, when we get to a new low, they'll just buy. So they'll set a limit order right here, and maybe they risk, I don't know, maybe they risk a measured move of this bar down to here. And if they did that, they buy this low, they put a stop way down here, set a target up here. Maybe they go for twice the risk. So they buy this low, stop somewhere down here. Here's 1 times the risk, here's 2 times the risk, took you up to here. I don't think a lot of traders see it that way. I think they just, I would not recommend that. It's better to wait for the stop entry because the risk is real. I mean, you could just melt down. So that's all I've got. Thanks for watching.